Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox Business, Fox News, the New York Post, and most recently, the partner of the granddaddy of data, the one and only Bob Sloan, who we're both in the studio today over at the global headquarters of S3 Partners. The S3's data, we should point out, is the number one independent data provider on the Bloomberg network. It's followed by all. It's why I got to know Bob, because the integrity and the deep, the deep information. It's an information well, I guess, is the best way to put it.
Yeah,
right? You go down there and you pull a lot of good stuff out.
we do,
and that's what S3 does for your trading. Basically for trading and basic and economics. You know, you guys make a lot of economic calls with your stuff.
We do. We look for the hidden gems in the data,
right?
See how things are set up.
And those hidden gems come out once a week on this show. It's good to see you in the flesh, Bob. I want to get to your stuff in a minute, but I want to hit two topics that I've been writing about. Number one is that Paramount, Skydance, the Ellison's company, it got basically got a pass by the Trump administrations to buy Warner Brothers, the big $81 billion deal. No surprise there. There's almost no real antitrust issue here.
Right.
I mean, Hollywood is going nuts because they go nuts over it. I mean, they're stupid. They don't understand that. And Mark Ruffalo, do you think Mark Ruffalo is like leading this guy is so left and he doesn't know how to add. You know what I'm saying? So, when Mark Ruffalo is leading the opposition to a deal, it's kind of like you might want to think twice, but he has impact and influence in left-wing circles. And there's two attorneys general who are very left-wing in two very left-wing states, which are becoming increasingly more left-wing as we speak, as we saw last night when those New York, primary battles where Democratic Socialists, Mondami types won in New York. And we all know what went down in California with the mayor's race, how Karen Bass will likely run off against a far lefty who might win, by the way. Forget her name. It doesn't matter. This doesn't really matter.
Isn't that crazy?
It is crazy. But anyway, those two states, the attorney generals, Tish James in New York, Rob Banta, I think his name is, in California, are poised, from what I understand, to sue to block this deal. Now, this is where it gets complicated and kind of interesting as a journalist. So, you would think antitrust law is federal, but if you get enough states, especially if you get big states where a lot of commerce is domiciled in, which New
York and California
New
would
York,
be two of those states,
Street,
right?
And even though it's losing its luster, and California, even though it's losing its luster in Hollywood, those are still important states. Those states could do TROs, like you can't do business in our two states, and then it's effectively null and void. A judge in those states could, a federal judge in a lawsuit brought by those states,
and a TRO is a restraining order.
Could stop the deal. Here's the thing. I don't think that's going to happen. The antitrust thing is so weak on this. First off, studios are kind of like a dying business right now, even though box office is coming back a bit. It depends. Every time it looks like it's coming back, you see a flop. By the way, Spielberg's Disclosure was supposed to be some big hit.
Yeah, didn't do well.
Sucked wind. A lot of the Superman I heard sucks, or Superwoman. Is it Superwoman they got going?
Supergirl.
So, yeah. Are you a fan?
Well, but I'm trying to think the last time I went to a movie theater. It's been a while.
Yeah, me too. So it's still not where it was. So there's no real antitrust worry here on the studio because they are combining two studios. I guess you could say, is there an antitrust when it comes to combining the two streaming services, Paramount streaming service and HBO Max? Well, that's not Paramount. It's got a kind of a.
But when was the last time
a middling streaming service?
Yeah, but when was the last time an approved merger at the DOJ, the federal level, got reversed by a restraining order? You probably have to go back to like 1888 railroads or something. No,
I think it's more,
or was it more recent than
I
that?
think so. That's a good question. I should check that. That is a legitimate question to look up. But
and not that matters. If it's precedent, it's precedent.
And by the way, it's not that it matters, because if you can delay the deal,
right, and that's the whole point.
And make them difficult for them.
Right.
And these are two progressive politicians.
Hmm.
As you know, the Ellisons, particularly Larry Ellison, the Oracle co-founder, is close with Trump.
Yep.
They hired Barry Weiss to bring CBS, and presumably, if they get this deal, because it's part of Warner Brothers, CNN to the middle.
Right.
That's their whole goal. And we know there's a lot of contretemps surrounding what Barry Weiss is doing at CBS with Scott Pelley. And Scott Pelley had I didn't know this until today. Someone told me who was in his office. He had like a treadmill and kind of a weight room in his office. He's a big dude. No wonder, So I got to get my next deal with Fox. I got to get like a treadmill.
You got to get like you should get like a techno gym.
I guess so.
Like an all-in-one piece, and put that right in your office.
In my house. But yeah,
I know, but you put it in your office.
I might do that.
I should do that here.
But knowing Fox, they'll say, "Okay, you can just leave. We just won't pay you." So I don't know if that's going to work. So they are what's been described to me over at Paramount Skydance is that every day they're think they're going to wake up to the lawsuit. By the way, the stock on the story I broke today, it dipped about $1.
Yeah, interesting.
It went into the red. It bounced back up. I don't know what it ended the day at. I have to check, but it did move the stock, which it shouldn't really move because everything should be baked into the stock price. And what the stock we're talking about is P Sky, Paramount Skydance.
Yep.
It should be. It's Paramount Skydance.
It should be at the deal price.
Went down, and now here's why it went down. My view is because people are already counting synergies on these two things and saying, okay, how much is the combined thing going to make? And if Paramount Skydance doesn't get this deal, there's really not that much of a company there, just so you know. So,
but in the age of TikTok, right? So you have yesterday, you have a Mamdani ticket, basically win all 3 primaries,
right, in New York.
Controlling CNN, controlling CBS in the era of TikTok. Where do you come out on that? Because Fox just bought Roku, right? Which is a pretty amazing thing.
Oracle has a role in TikTok.
No, I understand. No, I know. I know. I get that. But okay, so you're gonna put them all together. Like, how's it all play
You never
out?
know. You never know. I just don't think it matters. My view from an antitrust standpoint, this is all about commoditization. What Hollywood is pissed off about, if Netflix bought it, they would have. I don't know if they'd have the same sort of venom because of Ted Sarandos, who runs Netflix, is not close to Trump, but
right.
Larry Ellison is. But I think there would be an antitrust, because I saw a lot of antitrust backlash from Hollywood types.
Yeah.
So nothing's gonna appease them. What you do have to realize, and here's why this is not an antitrust story, or it shouldn't be. Before the deal talk, the stock was trading at about $8. Now, David Zaslav did an amazing job getting the Warner studio in line, producing some really good hits. I don't know if they're good movies. I don't.
Well, he got everybody around the table fighting over it, right?
Right.
He did a great job doing that.
Yeah, and that was later, but he did get his house in order. It was kind of cold debt.
Yeah, pre the deal. Yeah.
Pre-deal, cold debt. He got some hits. It was the number one. Right when the bidding started, he was the number one studio. He put out Sinners, and what was the other one? The one with DiCaprio, that kind of dystopian, futuristic thing, which I heard was a creepy movie. But anyway, that won the Academy Award, I believe. So he did that. He got HBO Max, their streamer, profitable. I mean, not wildly profitable, but profitable. Mm-hmm. So he put all that together. He did sort of create this really sort of interesting company ready for sale, and then he created a bidding war, and the stock went from anywhere between 8 and 12 to where it is now, $31 a share. But remember, it was trading at about 8 and 12, between 8 and 12. Interesting. And that would not have been that would have been their that means that Wall Street was saying that there's not much running room on this company. This is a really difficult road by itself. So remember that, and he was cutting jobs and cutting costs, and he would have kept doing that. So remember, Hollywood, if you think, you're in a better position now, I think, with two companies, synergies, two companies that might actually make it than you had, and with some deep pockets backing it up. Larry Ellison's net worth bounced back with the shares of Oracle stocks going up. So this is a much better company. So that's one of my headlines. The other headline will come out tomorrow. is what no one could figure out is why Cory Booker, who's the New Jersey senator, is against the reform of college sports thing that Trump put together. So Trump puts together the Blue Ribbon Panel. Ron DeSantis, the Florida governor, Randy Levine,
Mhm.
the president of Yankees,
Yankees,
are
yep.
co-chair of this thing. They come up with a set of recommendations. It gets translated into bipartisan legislation between Ted Cruz, Texas Republican, Maria Cantwell, Washington Democrat. It gets through the Commerce Committee, bipartisan, and people like Cory Booker, the New Jersey senator, is still against it. And people like him are basically and he's like one of the leading voices against this, where it's mind-boggling, because for years he's proposed a legislation to reform college sports, making sure they have health care and medical. And on top of that, he was a college football player. He played for Stanford. I think he was a tight end for Stanford. And this bill, to be honest with you, preserves college sports. It makes sure not all the money goes to football and basketball. It doesn't allow them to have collective bargaining. Collective bargaining is like some sort of like a rite of passage for left wingers, even for college students that are on scholarships. I mean, that's insane.
Joe, it's one of the things when we do a deep dive for this show, we come up with a lot of data. One of the things that struck us is we'll talk about SpaceX. The company's valued at almost $2 trillion. Almost,
right?
It came out at 1.7. It was almost $2 trillion. Now it's fallen back. SpaceX in one day fell by about $250 billion.
I know, it's like,
okay. But think about what this says about our system. SpaceX falls by 250. B.
Right.
What's the market cap of Alibaba?
That's a great question. 250?
That's exactly right.
I would think so.
So in other words, our system falls by as much as the largest market cap company in China. This is what a lot of politicians don't understand.
Right.
It's our system.
Right.
We are creating amazing companies that are attracting capital and will attract more capital. And so when I hear things like, well, it's got to be the way it was 50 years ago, like, yeah, there was a need for unions and there was a need for collective bargaining. There were abuses, but that same solution set, coal miners and so on, sure. But what Marx never really figured out is that he never thought that a guy like Lyndon Johnson would ever do the Great Society. He never thought there'd be a Voting Rights Act.
Mm-hmm.
Marx never thought that. He didn't think that the owners of production and politicians would get together and find a solution. It was beyond him. And yet you have these people running around saying, oh, no, we got to do the same thing we did 60 years ago.
Yeah, when everything was different.
Different, right? It's so...
Well, collective bargaining on a college level is particularly absurd, because these are students here on scholarship, right? They're not exactly.
Yeah, but they're not. At this point, so if you go to if you play Division I sport, this is something I know a little bit about.
Which one? Which sport?
Well, any sport. Okay.
Depends on the sport.
Well, hold on a second. You play any sport that has a genuine time commitment, which is like all of them. You're basically told you can't take certain courses. There is a certain pathway for you,
right,
because of your commitment.
Mm-hmm.
So yes, you're a scholarship student, but you're really not, because yes, it's being paid for, but you don't have free choice on what you want to take as an elective, things like that.
Are you sure about that?
100% positive.
I never knew that.
You are politely steered to stay away from things that take away from sports.
Like you shouldn't take calculus.
Correct. Or you shouldn't be a physicist, or you shouldn't be a biochemist. Things that are truly demanding, academically rigorous.
Economics or something.
You're given a different pathway. So I'm all for the college students getting paid.
Suppose only two.
All for it.
Oh, suppose only two sports get paid.
Well, then they have to subsidize everything else.
Well, that's the problem, because
if you're going to take that and give it to private equity, then it needs to subsidize everything else.
But here's what happened: two sports are.
By the way, it not only subsidizes other sports, but if you go to a Clemson or you go to an Alabama or you go to a Georgia, you go to these big SEC football schools and you look at their campuses and look at how new the equipment is and new the classroom. Where do you think
Right.
the money? Where do you think the money's coming from?
Yeah, but Rutgers. This is what burns people up about Cory Booker.
Yeah.
Rutgers has like a $78 million deficit last year on its sports department because of this.
Right.
Because it has to pay people in two sports
to attract talent. Right.
To attract talent. And here's where it gets really crazy. There's these things called boosters that are allowed to operate under the various Supreme Court rulings.
But that's always
and those
been the
boosters.
case.
No. Since the money grab became after the Supreme Court sort of got involved with this whole issue called name, image, and likeness. And so when that happened, these boosters can circumvent the NCAA caps, right, and take donor money to attract sort of outside fundraisers for the schools.
Yeah.
But they only do it for two sports.
Yeah.
So all the other sports get screwed and academics get screwed. And you know that, and certain schools do okay. I'm sure the University of Miami does wonderful. The Clemson Tide does wonderful. Rutgers, not so wonderful. It's very difficult, even though it's in the Big Ten.
But there are a lot of public schools that do well too, like the University of Virginia, North Carolina, big sports schools. And Rutgers,
not on sports. They do better. They. I mean, I don't know their whole donor. They have a big endowment.
Huge.
But they have a huge endowment. Otherwise, it's the schools that really compete in sports have a hard time doing this. And these college sports are, like you go to college, not just for two sports. Right? College usually used to prepare people for the Olympics and figure skating and pole vaulting and you name it. Those sports are getting the short shrift, and
but that's because of all the sneaker companies and all the subsidies and everything else.
That's why Trump wants to fix it.
What's he fixing?
Well, making sure that the women's sports actually get some funding.
Right.
Other than maybe basketball, they're not.
Right.
Okay. Making sure the men's pole vaulting team gets some funding,
right?
Because all that donor money is flowing through the boosters to football. So Arch Manning can make $1 million. I mean, Shedeur Sanders,
he made a lot more than $1 million.
He made millions, off of his deals.
I mean, I think that
by the way, people are
the quarterback from Duke just went to Miami. I think he got like a $15 million.
Think about that. You go from Duke to Miami, and you stay in school. A lot of these people are staying in school past 4 years to do this, and they're not going pro.
Yeah.
So there's a cap on that as well. You can only do it 5 years. You can't. There's caps on, like, it's called a portal. You can't jump. There's certain ways you can jump and certain ways you can't. And this is eminently fixable. But Cory Booker and people like that are just poking holes in it. I think mainly, this is my opinion. I did put a call into him. He did not get back to me or his people. It's my opinion. Correct me if I'm wrong, Corey. I think he's only doing it because he hates Trump. This is like Trump derangement syndrome, because Trump came up with this thing, which is obviously a decent fix for I mean, it's not perfect, but it's a decent fix.
But
it's better than what we got.
Going back, let's say you try to fix it. It's not going to stop boosters,
but they don't want it to stop. They just want it.
There's so much underground money in college sports.
But that's fine. It has to be some sort of regulation of it. By the way, colleges are not the free market. You know that.
It has become something like free agency with the transfer portal.
Semi-pro.
It's semi-pro,
but it shouldn't be, because if colleges are operating under all sorts of rules and regulations and tax exemptions and things, where they
interview the
they get federal government money.
Interview the NCAA. I mean, that's the craziest organization ever.
Well, that's the heart of the problem, because they never did anything about this, really. And so Trump stepped in.
There's all this arbitrary enforcement of rules. It was just
I could say Trump has two people that are doing it that are, I think, very highly of, and they're really smart. Randy Levine, really smart.
Really smart.
The Yankees president. He knows more about the business side of sports than anybody I've ever met. And he's been a labor negotiator for years. And Ron DeSantis is he's a really sharp guy. I sat down with him at Milken, did a fireside chat. I mean, this guy could talk about anything. He's really smart. And by the way, former college baseball player, went to Yale on a scholarship. Then he went to Harvard Law. I mean, he is the real thing. Those are my two headlines. SpaceX was off today, I noticed.
Yes.
Not down tremendously, right?
No, there's about 40 million shares shorted, but it's not a lot. I don't know, 6, 7, 8% of the float.
Is there a bigger dump coming on this, you think?
Well, one of the stocks we've been looking at, which is Figma, which is an Adobe competitor. Right? If you look at Figma, and we just pulled it up, and you can see uh, this is one of these stocks that went public, had a huge overhang. People had to hold on to the stock after the IPO, and there were certain vesting
Right.
requirements you had to meet before you were able to sell your stock. And this is exactly what this is, a maybe a pretty good chart if you're looking at SpaceX,
Why?
because there's just so much stock that has to hit the market. It's like SpaceX, no one could sell it right at the IPO. You couldn't dump any shares. You have to wait. It depends on the type of investor and where he came in, et cetera, et
Right.
cetera. So there's a huge overhang on the stock.
And
Right.
then 3 days later, the sale
Right.
began.
But it's not even 3 days. It's as long as 6 months.
So
So
for some of the insiders, absolutely.
well, not even outsiders too.
Like if I bought it at the IPO, I couldn't.
Yeah,
afford it?
there's a holding period.
And who sold it then?
Good question. So stocks can fall, but stock price can fall. I think it is in the Nasdaq index. It's not an S&P. The float is freely tradable,
Okay.
right?
So you can buy it in the secondary and sell it. And
You
then
can
sell
buy in a
stuff.
secondary and sell it. But there's still holdings that are obviously being held by investors that can't be sold unless they meet a certain time threshold. So this is a good example of what happens when there's a huge overhang in the stock. You see the short interest going through the moon, because there's so much supply that has hit the market. So I think what you're seeing in SpaceX is something akin to this.
Amazing.
One of the things that, Charlie, I don't know if you looked at our website recently, but we actually rebranded the company. And
S5?
no, not necessarily that way. Well, I would, if we were going to do that, I'd probably say S7, because
okay.
one of the things that we like to do here is always think about, we like to think we live at the intersection between expertise and curiosity.
Interesting.
And when we look at the marketplace as it is, the structure of the marketplace has never been more important, and we're going to talk a lot about this today. There are 6, when you turn on your Bloomberg terminal, or you turn on a FactSet terminal, or LSEG, or go to Yahoo, there are 6 categories of data you have to have. You have to have earnings, you got to get prices, interest
Absolutely.
rates, right? So there's a package of information you have to have just to start your day. And there are 6 categories that have defined what market data is. What is financial information is defined by those 6 categories, like we said, earnings, interest rates, et cetera. As it turns out, because of the rise of BlackRock and the rise of State Street and the indexers and
Indexes
Vanguard
and the ETF.
and the
index.
ETFs, exactly, and passive
Passive
investments
investment.
generally, what's happened is that you really need a 7th category,
Interesting.
and that's positioning. So what is long? How much passive is in the stock? How much truly active managers in the stock? And how much short interest? And why that's important is because indexes are really momentum.
True.
Right? And so as long as money's coming into the index, indexers will invest that money.
Absolutely.
Okay. And for active managers, most of those are hedge funds, not all, but most.
Right.
Well, they get money too. And so you've had this perfect storm where there's a tremendous amount of flows coming into passive investments, but most people haven't really looked at it and said, wow, the hedge fund business now is at $5 trillion. But that $5 trillion is levered. The index money is not. Right? So why is that important? Well, if you know how much passive investment is in a stock, let's say they own 30% of the stock, and you know that active owns X and short interest is Y, you're seeing the battle between the unlevered dollar and the levered dollar.
Interesting.
So we want to pull up a couple of things. One of the things we want to tell everybody about, and one of the things we got right very early, I was on Bloomberg TV.
So the rebranding helped me out here, though. It's just this extra category.
Yeah, we are the standard for long and short positioning. We are the seventh category of market data.
The seventh category of market data. I love that.
Thank you. That means a lot coming from you because you've heard a lot of gimmicks on a lot of things and things that don't say what they mean.
That actually sounds good. Most of this stuff sounds like bullshit.
It sounds like bullshit. No, we actually have founded this category, and our aim is to be the Google of the category. When you say seventh category, we want you to think about S3.
Okay.
So we're talking here this week, energy, and we had talked a lot about this on the show, and we talked a lot about this on Bloomberg. There was no short interest going into energy. It was a one-way bet, and you saw passive and active managers plow into the stocks. There's no short interest. Guess what happened? All of a sudden, there's a peace deal. There's no short interest. All these energy stocks fell like crazy. So in Q2, they're down 12%. And we told people that there was an air pocket in the industry. It's set up. Be careful.
We said that on air
many times.
Now, we didn't. I think you and I discussed it, not as the seventh category necessarily.
Well, we were working on it at the time.
Yeah, you were working on it, so I guess you had insight into it. But my position was, all they need is a deal here, and oil is going below 60.
Yeah,
and I don't know where did it end up today.
I didn't
still doesn't have the 6 handle.
No,
on it yet.
Not yet, because there's still so much toing and froing with that.
We might have to bomb them again.
We might have to.
This weekend,
but that's crazy to be so off-handed about it and so casual about it, because it's a serious thing.
No, I shouldn't laugh, but it is serious. And what's serious about it is that we're dealing with lunatics, so you never know what's going to happen.
Well, maybe they're more rational than we think. They're negotiating in a very interesting style, in a way that they're trying to extract and themselves out of a very, very, very difficult position. They know they're overmatched. Otherwise, they'd be doing something differently. So,
I do think if they showed a little love to Trump, he'd give him more stuff. Yeah, bring the nuclear guys in, and he'd say, "Okay, here's $300 billion." Knowing what I know about Trump, he likes people that kiss up to him,
right, and like him. So you look at the memorandum of understanding. It seems to me like it's Versailles in reverse.
Versailles in reverse.
Well, it is, right? So the whole thing was in World War I, right?
Yeah,
Which was we're going to punish the other side economically and make them pay reparations. That caused the Weimar Republic. It caused the debasement of the currency. It caused Keynes to write the famous tract about Versailles and predicted the outcome, right? So this is, we're going to pay you up front. Actually, we're not going to extract anything from you. We're going to pay you, give you money, and hope that your behavior changes. So if that's the deal, that's not a great deal, in my opinion. But anyway, we can move on from that.
We can move on
because we don't know. We're not around the table. We're not privy to the details, but we read what we read, and that's my opinion. But let's bring back a couple of things. We want to talk about Micron, which is and Qualcomm. So just to talk about this,
I haven't heard these names in a while.
Yeah.
Why are they kind of like?
Oh, they're chip makers, right? So it's like,
shouldn't they be more front and center in the debate,
the
market debate?
100%. So one of the things that we looked at was the information technology sector, and we looked at active managers. And thanks. So if you look at information technology, that green line there,
interesting.
The active managers, increased their positions, but they're underweight to the sector. So if you look at all the active managers in the hedge fund cohort, they're about 28% long information technology. The index is like 32, maybe a little less after yesterday, but let's just call it 32%. So they're underweight, but the short interest is actually right at market weight.
Interesting.
So they're at market weight on the short side, underweight on the long. Passives have been increasing all this time. So this is telling you there's a fight between the hedged, the levered dollar is skeptical.
Interesting.
That the earnings will be good. Now, by the way, I think Qualcomm just reported today, and they knocked it out of the park.
So the passive guys won this one.
Yeah. So Qualcomm was up 11%. They beat on revenue, margins,
Passive
and
guys won this battle, you're saying?
correct. So why this is important? Because investors are scared to death of crowded trades, and they want to know if there's more capacity to improve. So if you know that there's an increase and Qualcomm's doing well, you know that there's going to be an increase in passive investment, which means there's capacity to do more. There's more liquidity.
Interesting.
So that's really why we wanted to talk about that. And then you've got they're about 30% 5 years ago. Now the total is 37% or 32% versus active of 9%. So the passive is taking over these stocks. And as long as people are chasing momentum, as long as money's coming in, those stocks are going to rise.
Interesting.
Right. So there's more, there's not crowding, and there's a lot of capacity. That's what people are looking at. And that's how you start using our data. However, you see Qualcomm short interest is at a 5-year high. So the levered money is like, wow, can the unlevered money keep up flow of money at this pace?
Historically, who's usually right?
That's for the next show.
Come on, you gotta tell them.
Well, we got you. Look, I mean,
come on, just your 2 cents. You can't leave people hanging.
Well, okay, fine. So, in a stock that's probably up 12 to 15% after hours, and if you were underweight that stock, you know what happened, right? You're gonna underperform.
Right,
So passive wins. Passive has won massively, right, over the last 10 years. Yeah.
Okay.
But that doesn't necessarily mean that
on this case scenario.
Well, in an overall structure of marketplace, this is happening in many stocks. We're just picking the
chips,
the chips because they're obviously very important. But the reason why we talk about it is because the stock price is the facade. We look at the building and say, wow, it looks really nice. The market, the positioning is what's inside the building.
Right.
Or the building behind the building.
Predicts the future.
Right. You're saying, well, what's inside the building? Well, okay.
Or
are the tenants leaving? Are they not?
We're not saying, we shouldn't say we don't, S3 doesn't predict. It gives directional guidance.
Oh, but we predict financial indicators. That's correct. We don't necessarily, as a business, predict stock prices for every stock. We don't.
Amazing financial indicators.
Exactly. That's what we do. So if you look at Qualcomm, Micron, we really think those two things are a great archetypal example of what's happening with modern market structure.
Interesting.
And that is
the battle between
the levered and the unlevered dollar.
The hedge fund versus the Larry Fink versus Ken Griffin.
That's exactly right.
Okay, interesting.
And so they're having a battle every single day about who's extracting from whom.
Point out they're not personally doing this, Larry Fink.
No, but it's just they represent two styles of investing.
Called just symbols of that.
Well, that's right. That's exactly right. So one of the other things that we wanted to talk about today was the COPSI.
Archetypes.
And we want to talk about the COSPI. So the COSPI, we've been talking about.
Now, just so you know, I was on Fox Business yesterday. And we talked about the COSPI.
Yeah.
And I said, my buddy Bob Sloan.
Oh, you gave me a shout out?
Yeah. And I said, Vestory Partners and, a risk and return podcast. I always kind of like throw it out there. Like, they all look at me like, do you have to really like advertise your podcast on our show? But in any event, I do. I can't help myself. Until they tell me to stop, I won't. I said, Bob's data, the S3 data has been warning about the COPSI for a long time, and this was ripe for a fall. This has been, you predicted this months
ago. We were eyeing this because it caught our eye, and one of the things that you don't hear much anymore, and it means a lot. When was the last time you hear people talk about the Magnificent Seven?
Not.
Why?
I have no idea.
Because there's a Magnificent 10.
Oh.
Okay.
And who's that?
Samsung, 1, and then Hynix.
One of the COPSIs.
2, Hynix. Okay. And Hynix is also doing a U.S. listing. They're 50% of this index.
Oh, interesting.
And so this is the archetypal so representative of AI, right?
Is S3 going to start in something called the Magnificent 10? Has somebody done it already?
No.
So why don't you trademark that?
I think we might have to.
I think we need one of our clips that we put out.
You know,
Bob
is
Sloan.
there a lawyer in the house? I mean,
So let's go through the Magnificent 10.
yeah.
Who
So
are they?
well, the Mag 7 plus SpaceX plus these two plus
So
the
that's
two.
10.
That's 10.
Amazon, Apple.
Amazon, Apple, Facebook, etc.
Netflix.
Meta, blah blah blah.
Is Netflix in there?
Oh, I don't know. I don't think so. They might be high 100 billions, but I don't think
Yeah.
they're in a $1 trillion club.
So so you throw in now SpaceX and these two.
Yeah. So you have a Mag 10.
Ah,
So the Kospi, is very volatile. You see short interest rising.
yeah.
And people are fading or trying to fade. Yeah, they're trying to fade. What they see is just a runaway, a runaway
Why does
train.
it dip at the same?
Well, because the price dipped.
Okay, gotcha.
Like a couple of days ago, you had a bad day in the market, price dip. So people have been shorting this quite a bit. It's a good proxy for AI and AI stocks.
By the way, the Wall Street research is already pumping out Micron's good earnings.
Yeah.
It just came across I could see it, which always scares me.
Yeah. So
Just because I hate touts, Not that the guy who's pumping this out is a tout. I don't say that, but when I see Wall Street research, pumping their chests, I'm like,
right. And so
it's a natural inclination.
When you look at the market structure of the Kospi, you'll see that the active longs have increased their positions 100%, whereas short interest is only up 50%. So people are still active, even though you see short interest rising into the tape and fighting the tape. You're seeing long cumulative growth rise precipitously, way above the rate of short interest growth.
Yeah, absolutely. Whoa, look at that.
Look at that. So one other thing we'll talk about, and then we can get back to some of the other things you want to talk about, is we'll just talk a little bit about the space sector, because obviously with SpaceX, it's all the rage. And you have just the pre-revenue names like Intuitive Machines, like Virgin Galactic, et cetera, that we've been pointing out. The short interest Z-score, the history of its own history. So in other words, the number as compared to its own history is much, much higher. The marketplace is saying any pre-revenue model they're just trying to kill, and anything that's actually making money or has a revenue associated with it, you're seeing almost no short interest in it at all.
Interesting.
So the marketplace is saying if it's making money, it probably survives. If it doesn't, like, we're going to take it out and shoot it.
Well, SpaceX isn't making money.
Well, but they've got them now making money and making revenue, obviously two different things,
Right.
but they have a revenue model. Now,
Yes, definitely.
who knows whatever happens there.
I mean, they had to build out AI, so
I really think people miss that idea that this market cap fell $250 billion, then it's as big as the biggest company in China. I mean, think about like all the things that we are worried about as a country.
Was that irrational, or is that exuberance, or is that speaking about?
No, I just think it's the system saying we're creating vehicles that could be many, many, many times bigger than our competitors.
Yeah.
If you can go from, if you can be Lewis and Clark and get across the country, if you can be Neil Armstrong and get to man on the moon, if you can be Jonas Salk and be that person that invents penicillin, if you can do all these different things, then the frontier is there. And that dwarfs anything that China can do.
It should. Yeah, I agree with that.
And that's the spirit of the country. So it's an inventor. It's an inventor game.
SpaceX is as American as apple pie.
I'm really fascinated by what it represents.
Well, I got scared when I read the S3. Not the S3.
The S1.
Why do I keep saying S3?
Maybe you think we're going public. I don't know.
Because I keep seeing your fleece and it says S3 on it.
We're not, by the way.
Yes, I know. But the S1, is wild ass document. I mean, just read it. It's very futuristic, and you got to,
Well,
it's
you know,
you need to. It's a little bit like you have to withhold your credulity a little bit to digest it.
when I hear a TAM of $28 trillion, okay,
Tam, help.
yeah, total addressable market. So what's this? If you sold every single piece of equipment to every single customer in the world, a potential buyer, what's the wallet? And they're saying there's actually $28 trillion
Of infrastructure.
of possible sales
Yeah.
if we sold to everybody everything.
Okay,
That's what TAM means.
that's a lot.
Well, think about it. It's almost the size of the budget of the United States of America.
Well, it's the size of the budget deficit, definitely.
R-
33
The
trillion.
GDP of the United States is 30 trillion. So in other words,
Yeah, it has to
basically,
be. So
in other
because
words,
it's-
like there's the
Yeah.
the wealthiest country's GDP in the world would be the same number as if we sold
SpaceX.
everything SpaceX had to everybody.
It's just amazing. Before we wrap up, we should talk about the passing of Alan Greenspan.
Yeah.
He's someone that, in many ways defined my career. I felt like, at least early on in my career, Alan Greenspan was one of those defining figures, because as I was coming up through the ranks, working at smaller papers, bigger papers, then getting to the Wall Street Journal for many years, and being at CNBC and Newsweek, Alan Greenspan was this like holier than thou guy. I met him once. Kind of was very cold, but I think that was more his
It was his style.
kind of his style. He was, he kind of wasn't crazy about journalists, but who knows?
Could you understand him? No one could understand him.
who could understand that? But Dick Grasso actually introduced me to him when it was at I think the Economic Club in New York. I was there one night, and I said hello. He very mixed record though in the end. Here's the interesting thing about Greenspan. He was a guy that did all the things that Kevin Warsh says, the current Fed chair, says is
Back to the Future a little bit. Right?
destroying the Fed.
Right.
Okay.
Right.
He created it. The use of forward guidance, the Fed as a tool of the economy, as
Right.
opposed to something that someone, an agency that should worry about the money supply and worry about price stability and these sort of basic structures. The economy should be run on the fiscal side, not from these guys, not from unelected bureaucrats at the Fed. He and in embracing that sort of all in, I guess, positioning of the Fed. He did some. He kind of set the seeds, set the table for some bad stuff. I mean, he was the guy. I remember talking about how great securitization was because it was expanding home ownership to the poor and working class.
Well, that's the knock, right? He missed the
No,
derivative
but
element to it.
he actually promoted
He
it.
championed it. Yeah.
And listen, I have no problem with securitization in and of itself. We can debate that all day long, but the government sort of using a financial tool for that type of policy is always going to have an impact a lot of different ways.
Yep.
You know what I'm saying? It wasn't very good in this case, because it basically said that anybody should own a house. You don't even need to put 20% down. It was that I remember him championing open borders in a way. He was kind of like the liberals' favorite conservative.
I read his book. The thing that struck me was he had a passage in his book where he said that he wrote a statement after the 1987 crash. And he said, and I'm paraphrasing here, this is my equivalent to the Gettysburg Address.
Mm-hmm.
He thought it was that good. And I thought to myself, man.
What is a Fed chairman doing that?
Well, the kind of ego in that statement was a turnoff, and I didn't read another page.
Interesting. And I think that's why I love you, Bob, and respect you, because that is ego. That is like stay in your lane.
Stay in your lane. This
You
is
know,
not the Gettysburg Address.
when
Okay,
Lincoln wrote
please
the
stop.
Gettysburg Address, I
This is a
guarantee you,
financial panic, and your job is to actually stop the financial panic. And I know you're proud of the words, and that's
yeah,
great. But I always said, who says that?
well, I don't even think Lincoln thought he was doing. He just wrote a good
He wrote-
speech.
on the back of an
Yeah,
envelope on a
yeah.
train, right? And it turned out to be
Very
like
nice
a great
speech.
song that gets written in 4 minutes,
Yeah,
right?
when Reagan said tear down this wall, did he think it was going to be that big of a thing? Maybe
Maybe,
not.
maybe,
He just it was came from the heart. It
right,
was 3 words.
right.
Tear down this wall. Tear down this wall. 4 words.
But like it it's funny that the obits on Greenspan were very polite. They didn't say, "Hey, the financial panic really happened. Oh wait, it really happened. Bernanke was there, but the buildup was under Greenspan.
Well, because he promoted those financial products.
It
There was easy money.
didn't really go there.
Didn't really talk about the housing problem.
Yeah.
He just didn't see it. Um, I think I don't want to blame him for the housing market because there was a lot of stuff going on there. You know what I'm saying? It was I mean, let's be real clear. There was this sort of confluence of technology, which they thought can minimize or eliminate risk, which is never going to happen. There was securitization, which was technology in of itself, which not just the Fed, but he did champion it. But all levels of government,
Right.
Fannie and Freddie were securitizing all sorts of stuff. And let's be real clear, that was under both Democrats like Bill Clinton and Republicans like George W. Bush,
For sure.
right? So it was bipartisan. So it was government.
But I just
The Fed started to veer off its course politically. I remember the Boston Fed would come out with studies about how banks were racist. I was like, what are you going there for? That's not true.
I love.
I mean, there was redlining.
The one thing that I love that
It's not
Warsh,
now.
just to get to Warsh for a second, the one thing that I really liked is he's doing what a good executive officer would do when you're taking over a institution for the first time. You do a review of everything,
Right.
and one of those reviews is data. And I'm really happy to see that because data and its underpinning is everything in today's world. So one of the things that is driving people crazy is AI, right? And if an institution like the Fed, there's white papers every 5 seconds about something, right? Some things arcane, some things really germane. And the issue they have is the data itself. What's the budget? How much? What do they take in? There's so many different types of data they could be using.
Yeah, and are they prioritizing the right data?
Well,
I mean,
here's the thing.
They were getting into ESG under Powell.
But okay,
DEI and weird stuff.
but there's a bigger point than that. AI. If you say to people, "What's AI?" Okay, people use these things interchangeably, and they're not, because you have to take it literally.
Mhm.
Machine learning is prediction. Now we've been doing that for 10 years, so technically we're an AI company because we've been using machine learning statistical techniques to give this data that's on the show, and we're very good at it.
Right.
Okay. Large language model is probabilistic. It's basically language, right? Not numbers, language, letters, and pattern recognition over a data set. So what the Fed should really be concentrating on is what's the layer that joins the prediction to the probabilistic,
Mhm.
and what kind of data actually gets put in there to help them understand
Inflation, particularly.
their two mandates. And if he's doing that, it could really revolutionize. It could really revolutionize the institution.
I know he's looking at AI from that standpoint. He's also looking at AI, how it's affecting inflation. And I also know the Fed has a dual mandate. He's more leaning on the inflation.
and what he's going to do with the balance sheet. I think a lot of folks really don't understand the structure.
Yeah.
And so the balance sheet of the Fed is a huge thing. The balance sheet of banks is a huge thing. to facilitate getting your money when you want it. That's liquidity. And understanding that and what he's going to do with that, watch the space.
It's hard to reverse the balance sheet of the Fed, but just the fact that we have a balance sheet of the Fed, which is at what level now?
I think $6 trillion.
$6 trillion.
That could be off, by the way.
Yeah,
I haven't looked at it in a while.
I've heard that number, but that'll tell you that we have a.
But by the way, but at the beginning of the financial crisis, it was $800 billion.
Yeah, so
and it went up to $9 trillion.
So that means we have this unelected body that was literally embedded into the economy. That
it had to be.
Well, sometimes it had to be, not all the time. And he was part of that initial had to be, right? Because he was a Fed governor during 2008. But afterwards, he would say, why didn't we get out of this faster? Why do we keep going there? And that was his big critique of both Bernanke, Yellen, and Powell. Like they relished in becoming policymakers. And I think that's what he'll bring differently to the table. We'll see. It's a work in progress. I think his first, right out of the gate, his first FOMC meeting shows he's no lackey for Trump. Didn't do the dot plot, predicting like where rates should be or whatever. What is the dot plot again? Essentially, it's predicting where everybody predicts where rates might be, right?
Correct.
And why do we need that? It's like ridiculous.
Well, it's a way of communicating to markets, but you bring up a different point, which is, one of the books I read early on was there's a book by Andrew Dixon White about the French Revolution. And it's about how politicians couldn't stop printing fiat money. So you're asking, why do we need QE 15? Is because politicians can't stop printing.
That's the problem. And so they're supposed to stop at the Fed. That's why we have a Fed.
And to your point, they became embedded, and now you got to decouple it. You don't have to decouple it, but the question is how long. You do it over 10 years if you have that luxury. Then you can do it. You can do it right away. Then you're going to freak people out.
Well, I think that's the problem with some of the Trump policies. I know we're getting a little off target. I mean, he made the point that we've been getting screwed on trade, right? So one day he just leveled tariffs on everybody. Now, if he did it over time, systematically, took on the worst offenders first, might not have noticed. Markets wouldn't have noticed, but that's not what he does. My guess is that Warsh will be much more plotting and systematic, just because he's not that way. If you ever met Warsh, I know him pretty well.
Yeah,
he's a very coherent,
methodical
guy.
Then he's the right man for the job.
He's definitely the right man for the job. As are you, Bob, the right man to tell the markets
about positioning.
You have anything else to share? Other than, are you going to be doing TV tomorrow?
Yes, I will be on Bloomberg TV with Matt Miller at 10:40. I'll also be on CNBC on Monday at around 1:30 with my friend Sarat Sethi, who does Power Lunch.
Oh, and any previews, or you want to preview what you're talking about?
We did it right. We did it right here. Oh, okay. we break the exclusives here. We don't share that with anybody.
Don't say that because they might cancel you. No, they won't.
No, we've got some other things to show.
Yeah, sure. They're gonna ask you a lot of questions about markets, and tomorrow's another news cycle. By the way, the news cycles moves fast, and it moves so fast we probably. Okay, thank you for tuning in to another riveting edition of Risk and Return. I'm Charlie Gasparino with my partner Bob Sloan from S3 Partners. See you next week.